And welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. After a good few months of concerning macroeconomic indicators coming through for Poland, suggesting that things aren't going so well and won't be heading in the right direction, we're getting positive news this week. It doesn't necessarily mean that the country is heading for some unprecedented boom, but it's been encouraging to see the numbers. Here to tell us what's changed and what it means for the end of the year and perhaps for the start of 2025 is Witold Orłowski, economist at Warsaw University of Technology and Vistula University. Hello, and thank you very much for coming back to join us on the show. So let's start with today's third quarter GDP results for Poland. We're looking at 2.7% of growth and only 0.1% of a contraction in comparison to the last quarter. And there's been a lot of noise regarding the structure of the growth that we've seen for Q3 and what it's based on. Some of it has been described as madness or perhaps a one-off. I was wondering whether you could tell our viewers about what it actually means and what the economy has witnessed in the past quarter.
Well, unfortunately, the data that we've seen today are not encouraging at all. In a sense, they are showing that we were too enthusiastic, starting from the Prime Minister, going down to the simple economists who were just happy to see the relatively high growth rate that was recorded in Poland by the Polish GDP, lately also by the Polish industry that although had some very good numbers on the output growth in October. However, if we look now carefully at the demand structure that is behind this growth, then we find, something that's not encouraging at all, because the economy still doesn't seem to be on the path of sustainable growth. Why? First of all, because the investment is not accelerating at all. I mean, it's actually flat. The consumption, it happened what one should have expected. I mean, after a period of very low inflation, I mean, the increase of the inflation that occurred in last month obviously led to the reduction of the speed of the consumption to once again to very low levels. And actually, if you look at the third quarter, the sources of growth, then you find out that basically there are two sources of growth. The first one is the accumulation of stocks, equal to 3% of GDP. It's very high. And secondly, the public consumption that although added 1 percentage point to the growth. The public consumption, let's leave aside. I mean, it's clearly partly connected with the expenditures on the defense and so on. So, well, it's not sustainable in a sense that it's financed by the deficit. So it's not really what we expect from the economy, although it's happening, obviously. The interesting point about the increasing inventory investment, because, 3 minutes ago, you said, or one of your guests, that may be the preparation for the big sales in the future. Well, it doesn't have to be. It also can mean that enterprises have got problems with selling their goods. That's also not very probable. The most probable thing is that there is some build-up of the stock of raw materials and semi-products in the companies, just to secure the future production. In a sense, there is nothing wrong about that, with one exception, that this is not a sustainable growth. This is a one-time effect, the increase of inventories. And this effect was responsible for 3 percentage points, more than 3 percentage points of the growth of GDP. And the whole growth of GDP was 2.7%. So altogether, that was the most important demand element. And this is a non-sustainable growth pattern. So looking all together, we are still waiting for the acceleration of the investment. That's the only thing that may really make us economists look happy, smiling. Although there is also one element worth mentioning. It's a slight fall of the exports. That's not a surprise. Germany is in a big recession. Actually, In a sense, it's a nice surprise because the German exports is falling much more massively than the Polish exports. And given the links between the Polish economy and the German economy, I must say that the economy is behaving in a relatively good way, right? So one could have been afraid of a bigger drop of exports. So the economy once again proves to be pretty flexible and adjusting well to the situation that may have something to do with the production mix, especially if you compare Poland with our neighbors, the Czech Republic, Slovakia, that are heavily dependent on the automotive industry. We've got a much more differentiated and much more flexible production pattern, and we are not linked to one industry and so on and so on. So the Czechs, for example, have got much bigger problems than Poland has.
Indeed, Poland's not doing too badly. I wanted to talk a little bit more about the exports because the export figures have actually dragged things down a little bit when it comes to the contribution to GDP growth. Are there any real prospects for improvement as of now, keeping in mind that Trump's protectionist trade policies are likely to show up on the horizon?
Well, the sky is pretty cloudy, I must say. There is the first, Germany is in a recession, as I said. I mean, Germany is the number one export market of Poland, with some almost 30% of Polish exports going to Germany. And Germany is also linked to the Chinese market, to the American market. And even if the Poland's direct exports to the United States is not huge, it's let's say maybe 2 or 3% of total Polish exports, but for Germany, the American market is of a crucial importance. And it's enough for us to see the German export suffering, to have the Polish export suffering as well. So altogether, I would say the direct effect of a possible trade war between Europe and the United States, if it happens, obviously, the direct effect for Poland doesn't seem to be very big one. But the indirect effects going from Germany and the other Eurozone countries that are main recipients of Poland's exports may be much tougher. Obviously, Poland is all the majority of the production of Poland is for the West European markets. So once again, the direct effect of the trade war is not the key issue here, but the deterioration of the moods of the consumers in Europe, in Western Europe, if there are problems, if there's a trade war with the United States, it's something that may be pretty painful for Poland. So we will have to deal with that.
Sure.
But as I said, let me repeat it. I am optimistic because of the fact that I see that the Polish economy is so much diversified and the exports are so much diversified that it is doing quite well given the situation. I hope very much it will continue.
And on that positive note, I just wanted to go back to the start of the week when Poland had turned up with positive industrial production results, 4.7% on the up, and retail sales 1.3% on the up. Perhaps the economy is not in for a U-turn boom, but are we looking for some tangible improvement in the near future?
Well, I'm very, very much skeptical about the economists who attract too much of the attention to a one monthly result. The Polish industry is on the sinusoid in the sense that 1 month we've got the fall of the production, another month we've got the growth of the production. This month, October, we had a very nice growth of the production, almost 5%. Seasonally adjusted, it was closer to 4%, but it was after the fall in the previous months. And basically, there is nothing that we can see as a sign of a improvement that can be sustained over the next months. I still would say that given the situation in Germany, the Polish exports, the Polish industry is especially vulnerable to the German recession. The prospects are not really very good. But if you look at the branch by branch situation, then we find a huge increase, some 40% increase in the production of the so-called other transport equipment, and that basically includes the military equipment. We do not know, this is not obviously well known, but one can suspect that there were the increased sales of the military equipment to, we don't know, the Polish army or the Ukrainian army, whatever. Once again, from the point of view of the production, it's obviously good, but this is a one-time operation. We had some increase in the production of some consumer goods, the food, the clothing. The clothing is not a big industry in Poland any longer, but the food is in the and that's encouraging. I mean, nice to see this growth of the industry, but putting too much attention to it, and especially predicting that is the sign of an economy that is accelerating. In my view, it's much too early.
Of course. Okay. That's all we've got time for today. Witold Orłowski, thank you so much for joining us again on the show.
My pleasure. Thank you.
And that was Witold Orłowski, economist at Warsaw University of Technology and at Vistula University as well. And I was your host, Marie Cato. Join us again tomorrow for Business Arena at 5 p.m. CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.